I've been watching your tweets all week thinking, oh, Lord, Ben's becoming an energy analyst now.
Hello, everyone. Welcome to another episode of The Circuit. I am Ben Beharin.
Get off my lawn. I mean, hello, listeners. I'm Jay Goldberg.
Our techno curmudgeon optimist gadget geek. Um, my head hurts, Jay. My head hurts from bubble talk, from people mistaking words and talking about OpenAI wanting to have the government fund them and then no, we didn't say that, and man, and Jensen, no, I didn't say China was gonna beat us. It's literally just like an onslaught of information addiction for everybody to either confirm or disconfirm one of their biases around are we in a bubble? Is this whole thing going to crash? Are we overbuilding data center capacity and power capacity and chips at astronomical valuations? Yada yada yada. So let's start and talk about some bubbles. And I want to start because I know you have some opinions on this. I really liked Ben Thompson's piece this week, and I recommend everybody read it about what happens with bubbles and even if they crash, productive benefits that come from that. Um, he had these guys on, and I'm blanking on their names, but they wrote a book called Boom, The End of Stagnation, which I now have ordered and will read. That essentially kind of makes this point, looking at prior cycles. Not all bubbles were bad. Even some were more sustainable than others, so it wasn't all doom and gloom. Um, but there was a number of good points in there and my favorite was in a cycle, like we're in, where everybody kind of feels like something's going on. Whatever's happening right now is going to drastically change the future, meaning that all the money, all the investment that's going into, in this case, let's call it AI, is going to make the future materially different than it was before. And so that's justifying the vast majority of this optimism. That cycle allows for capital to come to moonshots that in prior cycles no one would have ever raised money for. And we'll just name semiconductor startups, we'll name other companies who are getting a lot of money to just try something because everybody believes that this whatever we're in, the future's going to be different. There's a lot of opportunity, and someone might break out of that and meaningfully capture value who's not your traditional incumbent, right? Named NVIDIA, Google, Microsoft, Amazon, list of names, right? Go on. So I thought that was interesting, just again, because everybody's like, oh, it's going to be horrible. People are going to lose money. And I just thought, doubling down on, well, what if some good comes out of this? Namely, I think what's going on the grid, which we have talked about at length. We'll continue to talk about it in the future. Um, but I like that view, right? If we could take an optimistic view on bubbles, what good could come from this, even if it, crashes or collapses or shrinks at some capacity. So there's my first rant.
So my take on that piece was it's very much in line with what I've been saying for a while. And I don't take. I'm not saying I beat Ben Thompson to analysis. I've been reading his stuff since he's forever. So his way of thinking has deeply influenced mine. But my point has been that yes, we're in a bubble right now. It is it's excessive. It's going to get even more excessive and crazy. And at some point, the cycle will reassert itself. Things will crash down. But then out of that ruins, out of that wreckage, the real powerful stuff will emerge. That's been my sort of working mental model for how this is going to play out. And I always point to the internet bubble, right? Webvan and Pets.com had to die for us to have Amazon and Facebook and the rest. So I think that's right. The authors he was talking about, it's Hobart and Huber, Boom, Bubbles, and the End of Stagnation. It's interesting. I remember listening to them when they were on his podcast before, and I think the like, so I buy the thesis. Like, I think like bubbles do good things, right? The internet bubble, the telecom bubble, really of the '90s, left a lot of really cheap fiber that the internet companies then were able to use and do great things with. And I think something similar is going to happen here. We're going to get to a point somewhere in the future. I'm not going to put a number on it. Um, somewhere in the future, where suddenly there will be lots of GPUs lying
Yep.
idle, and
Yep.
some startup with 3 people will come up with some incredible thing
Yep.
because they have all this cheap compute.
Yep.
Um, the and I agree. Like that's how it'll play out, and there are huge benefits to that. The problem is between here and there's going to be a lot of pain for somebody. That's what kind of keeps me up at night.
Yes. Yes. Agreed. So I'll tackle this from another way, and I'm gonna throw out a amazing blast from the past for everybody who's followed semis for multiple decades like we have. So around like I think it was like 2001 or 2002, our firm used to help National Semi put on a big conference for their customers. And this was right as the bubble was bursting, I guess. And their CEO at the time, Brian Holla, had this very, very good presentation on stage where he essentially laid out what you said, which is been historically categorized as the boom bust build out theory. And essentially, every major cycle has sort of seen this where you have a significant uh, investment in something, right? He mentioned roads, he mentioned railways, he mentioned automotive, and because a bunch of capital, right, sees exactly what the point of Hobart's and Hubert's book was, which is whatever's going on now, like this innovation is going to change the future. So we're just going. And the example he made, which just always he made many. This is the one that stuck out of my mind, was during the railroad era. Right, they overbuilt capacity for railroad cars. And, it was very expensive to get a railroad car. Like railroad cars were the GPUs, right, of the day. Just absorbent costs. You had to have an insane amount of money to buy rail cars to run on the railroads. And when that busted, the cost of a railroad car dropped down so much, which led to the innovation of the frozen rail card, which spurred the birth of the meatpacking industry. But it was because, right, exactly like you said, somebody who couldn't have an entrepreneur, somebody with a great idea, could not have done that. They just never could have financed a railroad car prior to costs dropping to do so, to create the innovation that then led to an entire new industry, because somebody just was innovative. And that's, if we follow that and this happens, that we overbuild, right? We've got an overbuild of compute, the cost of compute comes down, and then something happens. And I actually saw someone on Twitter sort of say, if this happens, right, that's the mechanism that might create something like AGI. That cost of compute comes down so much that startups, innovators, software developers will start trying to do super intelligence. And so maybe it's not just the one or two firms, right? Because again, the cost of compute comes down directly. So that's been a pattern for the four largest industry cycles we've seen in the analog era, one for the digital era in .com, and now we're sort of in this one. And like you said, it's hard to predict, but again, right, to the degree that this is productive, one, we're going to have a significant grid build out. That grid build out, I would hope, maybe lives to the modernization of our grid, or makes cheap power happen for everybody, right? Because whether or not like all these data centers that need power stay, the bottom line is people are investing in new power infrastructure across the board, and that could be a net positive too, right? What could come from cheaper, accessible, better power, right, could be a net benefit. So I think it's easy to see some of those things. We obviously don't know all of them, but the timing's going to be very, very hard to predict when we may ever have a glut of compute. But I find it hard to believe we will remain compute constrained forever. Like it's kind of feels harder to make that argument, even though I've seen people make it. Um, but that's the boomish, the boom bubble, I guess, is the best way to say it that we're in right now.
Yeah, I think that's right. I think I have a lot of questions about just how many GPUs we need right now at this moment. And I know everybody says, "Oh, give me more. I can never get enough." Someday it'll be enough,
Yeah,
right?
I,
And
I've used
yeah,
yeah. Go ahead. I mean, I've used this analogy, right? And in fact, I said this on the interview I did with Ben Thompson. Like, I feel like we'll have enough when my agent doesn't take 45 minutes to go do my automated workflow, right? Like, speed of instantaneousness of AI is, I think, when we're going to be getting close to that. And I don't know how long that's going to be. I've heard people, like, for the flip side of this argument, talk about we'll move from 90-day training to instantaneous training. And maybe, again, maybe that comes out of a bust. Maybe that doesn't happen in this cycle because it's so hard. But lots of software innovation can happen. But I could tell you, like, right now, it just everything is slow and it needs to get faster. And once it starts getting faster, I think we might be coming closer to it. Compute is good enough. And I would say that's what I would say. Is it not necessarily that we have enough compute? It's that compute is good enough. Because if once it's good enough, why do I need to keep spending $5 million on a rack, right, every year and buy 20,000 of them when last year's is good enough or 2 years is good enough? And I don't know when we're going to get to good enough.
yeah. I think I'm not sure I'd measure it that way because the way I think of it is bubbles are not about technology. Bubbles are about capital, right? We've had successful disruptive periods of innovation without speculative bubbles, like mobile, right? Mobile was a pretty, certainly iPhone on. We had all kinds of innovation, and it didn't require massive disruption. My point being that like this bubble will last until the money runs out, until the money gets scared, right? And then things will come crashing down, and then all those people who can't get compute today will be able to get compute, and that'll be fun.
Yeah. Yeah. I'll also tell you, I want your opinion on this because I haven't made up my mind about how I feel, other than to say I lean toward I'm uncomfortable about this measurement. But everybody is now talking about measuring something in gigawatts. Like, the shift has happened from how many GPUs do you have to how much money can we make per gigawatt, or how much GPUs can I put in per X amount of gigawatt? How much, and I get it, right? Nvidia has not helped this because they started measuring their dollar value in gigawatts, and I say that because if that's the measurement, it actually creates a much easier way to say we're out of gigawatts. And so if we're out of gigawatts, are you out of money? And I don't like sales. Like, can you sell more? Like we've talked about, right? What happens if you just can't plug in more GPUs? You might want them, but you got nowhere for there to go, right? You can't power them. And I feel like I just can't tell if this is helpful or hurting everybody just talking about like the gigawatts, because that was the sole reason that I decided, I don't want to be a powers and utility analyst, but I've been catching up to speed on who has the gigawatts and who doesn't have the gigawatts, and where do gigawatts come from, and how long does it take to get megawatts to gigawatts. And but it's only because people started talking about it. In fact, I saw a report today, Jay. I just need to read this to you, just to sort of demonstrate the uh, I don't know, the absurdity of this, right? Okay, so TD Cowen, who I like them, like I'm not saying they're bad, but they essentially decided to break down the entirety of the supply chain by gigawatt. So what they've been for a couple of names that they come across. They estimate 1 gigawatt of compute requires about 2.5 billion of wafer fab equipment. Um, ASML captures the largest dollar of that at $600 million per gigawatt. TSMC earns 1.3 billion per gigawatt of compute. Again, they broke all this down, but I just don't love this way to do the analysis. So am I right, or is this not? Like, give me your take, because
Well,
go ahead.
when you started, I was like, no, that seems. But the more you described it, the more I'm on your side. I don't like this. I don't like this.
Yeah.
I mean, like I was thinking way back early in the podcast, like 2 years ago, we talked a lot about power. Right, power has always been the constraining metric for data centers. Right, when you talk to any of the hyperscalers before AI, right, when you talk to the hyperscalers, they would always that was the constraining factor. They would optimize their data center compute layout based on how much power they could have. That was always the conversation. It wasn't about money. It was about performance per watt,
Mm.
and then figuring everything else out. I guess what's changed now is to extend that thinking into every other company on the planet, and I think that sort of I don't think that's helpful. I think that I think we're missing the forest for the trees somewhere in there.
Well, and again, because I tweeted out a chart, which I showed you, which basically shows how much gigawatts everybody in this chain has, from the hyperscalers down to the neo clouds. And if you just assume that the vast majority of compute today, or gigawatts today, meaning that these are places they can put GPUs, is full right now of existing infrastructure, most of that being just general cloud CSP stuff, right? Not even AI factory stuff, because most of them aren't going to just like Amazon's not going to rip up half their infrastructure that they use to host workloads for SAP and Salesforce and Walmart and whatnot to go to GPUs for AI workloads, right? This is generally like new builds, because you need new infrastructure, new power, new cooling, like everything. They're retrofitting some of their old data centers, but not a lot. Most of this is going. So if you just look at what's new in gigawatts, it's not that much. It's enough. I mean, it's a lot. It's I could give you the number, but I don't have it off the top of my head. But it's not 100 gigawatts, right? It's what's there for new growth is much smaller. So if you're telling me that's a static number that comes on like every year. So I just feel like it's just the worst way to do this, because you're hurting yourself. You're capping your revenue by making people do this model as X per gigawatt or megawatt. But that's how everybody's talking now.
Yeah, I mean the other reaction I had when you were describing that model was my hats off to the Cowan associate who had to pull all those numbers together, because that's like that can't be a fun Excel model to build, right? But I think it does. It's useful to a point, but also I think I think the risk in looking at everything that is that it discounts the potential for all of those things to change. I think I mean you're sort of getting at the same thing. You're saying it's static. What if I can figure out a way to save 10% of power here,
Sure, sure,
right?
absolutely,
Right,
absolutely.
and that sort of speaks to profitability more than anything else. It's like where okay, we have this much electricity, but like, what it doesn't really matter the raw output so much as the profit you can make from it. Because I could you could contrive a scenario in which you get huge amounts of power, but it's you I don't know where I'm going with this. it's
No,
it's a, it's
no,
it's a tough way to look at
yes,
it's a tough
yeah,
way to look at the market.
yeah, exactly. But again, right? This is, like I said, my sensitivity with it is just, this is the way that everybody has started talking about their economics, and that's why I said I was torn. I wasn't sure. I'm like, is this bad, or is it good? But I just lean toward, I don't love it, and I don't have an answer to a better way to showcase your upside. Um, but yeah, it weirds me out a bit, and I just worry that it comes back to backfire at some point.
Yeah,
But if that happens, so be it.
I mean,
It
I
backfires.
I've been watching your tweets all week, thinking, oh Lord, Ben's becoming an energy analyst now, right?
Oh
Because
man,
because
it's
I'm in the same camp because I'm essentially a credit analyst now, right? And in my world, I'm an equity analyst. What an equity analyst covering tech? I've never spent much time on the balance sheet of my companies. Never had to, right? Because
yeah.
balance sheet is not an issue. Nobody's taking on debt. There's no complicated, right? And now suddenly, all my companies are taking on debt and have these. I'm trying to parse through all these neo cloud deals, and like it suddenly now I actually have to clean up the balance sheet on all my models, right? And it's because these are the things that people are looking at now. Like debt is becoming a big function here, and so you're going to be an energy analyst. I'm going to be a credit analyst.
I don't want to be Jay. I just people are forcing us to track the gigawatts, as I like to say, and the outcome of that is I'd like to know who has the gigawatts and how many gigawatts are coming because again they've told us that's how we're going to make money. Our economic upside is tied to gigawatts. Okay, so now I feel like I should know a lot more about the gigawatts. So anyway, all right, let's talk about two companies who also are relevant to the gigawatt and the milliwatt at the edge story in ARM and Qualcomm. So let's start with ARM. Uh, what was sort of your top line couple of key takes on ARM?
So yeah, ARM reported this week. Um, they broke their streak for a long time. Every earnings report they put out, no matter the numbers, good or bad, the stock would go down, and they broke that streak for the first time. They reported a number, and the stock went up afterwards because it was a good quarter. It was a good
Yeah,
quarter,
it was a good
right?
quarter.
Right, licensing up, royalty up. They did, they're and then they seem very upbeat. I've talked to them and listened to their comments, and they seem very upbeat about stuff. The big sort of mystery, or the big elephant in the room, is they're working on a chip. They've never officially said that, but it's getting a little absurd now because it's like clear that's what they're doing. On the call, somebody asked them, "Well, you're investing in something. What are you investing in? When are you going to be able to talk about it?"
Right, their R and
And
D increase. Right.
right, I mean their OPEX is huge. It was $1 billion last year, and this year it's going to be close to $3 billion. So it's a huge
Yeah.
increase in OPEX, mostly R&D. Right, and I think it was their CFO Jason said we're not going to announce it until uh, until we have a non-cancelable order and the chip is taped out. Well, he didn't say the chip. He said we're not gonna announce it until uh, we've taped out, gotten something back, and gotten a non-cancelable order. And I was like, you just admitted you're making a
Said
chip,
it's a chip.
right?
Right.
You don't like tape out doesn't mean anything else, right? You're not a moving company packing boxes. You just said you're going to tape something out.
Yeah.
So they're making a chip. And then the question is, well, who are they making the chip for? On the call, they talked an awful lot about SoftBank, and they talked an awful lot about Meta. So those seem like likely contenders. I don't think it surprises anybody that Meta is going to design their own chip. They've already designed one. Wouldn't be surprised if they're working on another. The SoftBank angle is interesting, though. Not entirely clear to me what SoftBank needs a chip for, but my guess is they're doing something AI accelerator like, and they're going to have their own AI factory, their own token factory. So that'll be interesting.
That will be interesting.
But like it was funny because the ARM call went really well, and I was sitting there listening to it, and I was just like, I wish they would just tell us what they're working on because the mystery is going to kill me.
Yeah. Okay. So I have a couple things I liked. For me, it's always been, what are you doing in terms of customers for royalties, right? And so CSS has been a big part of this, right? For everybody who didn't follow this, right, one of the main reasons that ARM has moved from a low billions, a year, company to now, which is going to be a 4 billion a year, because 1 billion should probably be their quarterly minimum from here on out, is on royalty rates, right? So royalty rates are increasing, the number of customers they have, those customers are upgrading to new IP, and that is leading to royalty rates, right? And so for me, CSS is a big part of this, right? So looking at, how many customers they have in CSS, they said it's 11 with 19 licenses, and a couple of those are have upgraded to the newest platform. So you want stickiness and you want upgrade, right? Not that they don't upgrade, because you're going to get more royalties with the new IP as people upgrade on an annual basis. Because again, where that becomes interesting is the onus is on ARM to make each year's generation an improvement enough that that customer wants to upgrade, thus take on a bit more of a royalty. And that seems to be happening, right? They talked a lot about CSS and customers upgrading and stickiness with those customers, which leads to, again, right, more cores, especially in data center, which they remain optimistic on. And obviously, you're seeing everybody out there in the hyperscalers, right, continue to invest in their ARM-based CPUs for instances. So that's positive, right? That's leading to a lot of growth, and like I said, it feels like that trend continues. So the growth rate continues. It's just a matter of how fast, right? And where do other pockets come from? Like you said, the other thing they announced, or I guess disclosed in this, was that they're buying DreamBig Semiconductors, and this is a networking IP company, kind of showing like, well, they want more than CPU. They have networking IP
No,
and GPU.
no. I
GPU. Okay, go
sorry,
ahead.
sorry to interrupt, but so I tangentially have known of DreamBig for a while. They're not. I know if you go on their website, it's very confusing what they do. It looks like a networking chip. It's not really. It's a memory controller. Is basically what it is. And so if you think about, if you have a CPU in an AI system, what is the CPU there to do? And it really is there to sort of just orchestrate moving memory
Moving bits
around,
yeah.
moving memory around. Like you have all the weights going back and forth across the model, and the CPU is essentially a scheduler for that and moving memory from GPU to wherever let's not get into the whole memory hierarchy, but that's what the CPU does. It's very heavily around memory management, and DreamBig is a RDMA controller, so it's basically a memory management tool. And so in that light, you're like, okay, they're just building a better CPU. That's what DreamBig was for. But I will tell you, everybody's confused about this. I talked to people at ARM afterwards who didn't know all this.
Yeah.
No. And it was a little weird, though, because they didn't actually announce it. It was just buried in one of the filings.
Right.
Right. And some analyst
to buy. It just says intention to buy DreamBig Semi.
Yeah, but I think that's sort of just you have to say that when you buy a company. You don't buy it until all the legal stuff is done. So, and it was a big number. It's $265 million.
Right.
Right. And after or on the call or somewhere, somebody asked them about it, and they said they kind of framed it as an acqui-hire, but I think it's more than that. I think there's actual real IP there.
Yeah.
But it's a little it's weird that they didn't actually press release it, because it's a big number. 265 million is a big number.
Right. I imagine they'll get more questions on that for clarity, how it fits, right? Because obviously, right, every part of the compute stack, yes, to memory, they have networking IP. They want to have IP that you can technically use for any part of the stack. How much is up to you, but I don't think they want to be completely left out of any area where they feel like they can add value in the compute chain. So we'll see. We'll see what more clarity comes from that.
Yeah, but going back to the problem with ARM, following ARM, is that it's very hard to sort of conceptualize what they do. Right? It took me years to really understand it, and so it's easy to get sort of buried in the weeds of they have all these new things coming along, like CSS, and they have all these new metrics. And I think the main point is ARM creates some amount of value for the industry, right? people use their stuff, and the mission at ARM right now is to capture a larger share of that value.
Yeah.
And so if you look at things like average royalty rates, since they went public, those numbers have gone up from 7 cents to 9.5, 10 cents per chip shipped.
Yeah.
Right. Yeah. And so they're making this transition to sort of capture more value, and all the things they're layering on top of that just sort of help that along the line, because what they're doing is they're making it easier for companies to design chips more quickly. That's the sort of super summary of CSS. And if ARM is listening, please do a teach-in on this. Like, nobody understands what CSS is. But then if you sort of carry that analogy forward, is they want to capture more value, they're adding more features. The next sort of obvious step is to move up the ladder and start designing your own chip. And right. And so, like, you think about the math from that. Yeah. From like an AI server today, my guess is they probably get about $10 of IP content, something along those lines, right? And $10 they have 98% gross margins, so you have almost $10 in gross profit dollars. When you start selling a chip, let's say they make hypothetically speaking, they make a CPU for Facebook. They're going to sell that for, I don't know, $100. And they get 50% gross margin on those, sort of normal, fabless gross margins. So that's $50. So mathematically, their gross margin goes from 99 towards 50, but they're capturing more raw dollars.
Yeah.
Right, and I think that's the play.
Yeah. I mean, agree. And obviously that number would be a lot more than $100 if you're going to sell a data center chip. Yeah. I do think they have fed into some of the commentary we've been talking about too, about, CPU growth TAM opportunities, just in volume of CPU and or dollar of CPU increasing because of AI. I am still interested in how this plays out because I do think you can make a case. You will continue to stand up a lot of CPUs, perhaps more CPUs than we thought of, next to AI servers in order to handle agentic AI. So it's more that Google and Amazon and Microsoft and, I don't know, Meta and everybody else, right, making their own CPUs don't just need more cores, but perhaps more CPUs is upside too. So, like I said, growth trajectory has been steady. And it's hard to see that changing, especially on the back of two of their largest volume customers will now start shipping full V9 in volume over the next year. So that should meaningfully impact, I think, next year's revenue as well. But I can tell you what ARM needs, Jay. You know what they need?
Yeah.
They need to tell us how much money they can make per gigawatt. Everybody, this is what you need. I want to know. Give me your revenue per gigawatt, per milliwatt in something.
Just in case it's not clear and ARM is listening, Ben is kidding. Please don't tell us. Please don't tell us your capacity per megawatt.
Per megawatt, per gigawatt.
Dude, they're gonna do that. They're gonna send us some numbers.
Oh man. Okay. All right. Let's jump to Qualcomm. What was your top line take on Qualcomm?
Qualcomm had a good number because people are buying more expensive phones.
This is true.
I think that's as simple as it is, right? I think, and you correct me if I'm wrong, but my sense is lots of people rushed out and bought new phones during the pandemic, and then
I think that's true.
That's 4 years ago. It's time to get a new phone, and I think that's what's driving a lot of this. And I think what's interesting for Qualcomm is people in places that don't usually buy expensive phones are buying more expensive phones.
That's right.
And they have more expensive phones. They need more expensive chips from Qualcomm. I think it's as simple as that.
Yeah, I agree. It's interesting on the back of both theirs and ARM's, right? They've had a steady run of seeing increased share of premium Android for many of the dynamics that you said. Like, that's been a steady thing. Like, almost every quarter, it's like, yeah, we're still seeing strength in premium Android, which is obviously important, right? In the context of not everybody that's buying expensive devices is buying iPhones, which if you check the numbers. But essentially, if you don't know that, or you might just think, or particularly if you live in the United States, that everybody just owns an iPhone. But I think the growth there in other parts of the world is important. ASPs are moving up, and I think it took a long time to get there. It's been forecasted for a long time, and yeah, that's benefiting everybody in the supply chain. Um, and again, it's not right in Qualcomm's case. It's not. I think one of the concerns was, are you going to do worse because iPhones look attractive, right, in the upcoming quarters, and is that going to impact premium Android in those segments? And it doesn't appear like that's as big of a concern. So that's a positive. Um, I mean, I would note a billion a quarter for automotive is good. I would love it if that number stayed over a billion a quarter. I have no idea if it would, um, but I think their automotive pipeline has been sufficient. I mean, I would just say this in the long term kind of outlook. Again, and this is true of what we said of ARM, but their CEO Akash on the call, said, "Look, we're
CFO.
continuing to CFO, sorry,
CFO.
CFOs. Everyone, sorry, I'm sorry. Yes, Cristiano is their CEO. Akash is the CFO. Was pretty clear, right, that they're on their target track for 2029 revenue targets, which was they basically had projected steady growth from the time they had their analyst event and launched that to 2029. So that's positive, right? Continued growth. There's sleeper categories I'm still intrigued with the smart glasses stuff. Not to say that like next year all of a sudden Meta's going to go from whatever 1 million to 10 million smart glasses sales. But I think Google's going to enter the fray, and that's going to be interesting. So there's some sleeper categories in glasses I think get really interesting. And they got asked a lot of questions about data center, which we all have questions about data center friends at Qualcomm, which you're going to tell us we know it's an inference chip. We got some details, but people want Qualcomm to get those dollars, Jay, those data center dollars.
I don't have any questions about their data center products. I have a pretty good idea.
Yeah.
I have a pretty good idea. I know exactly what's going to happen with that. I don't have any questions.
No surprises. There might be. I will say the idea that that it's a dedicated inference chip, like other people will do this too. I think the market fragments. I'm not gonna lie, like this is a tough road. Data center feels settled mostly on who's playing where, but the market's been optimistic on their opportunity there, so they will have to come out with a bang. But yeah, they got a handful of those questions, right, about data center.
They got a ton of those questions. That was a lot of questions ago.
Yeah, I think, and as I was trying to tell, like, some of the finance shows that I was on, because they sort of brought this up, it's like it makes sense when right now, for everything that we just talked about at the beginning, for bubbles and dollars and billions per gigawatts, it just feels like the largest pool of money right now. So just try to throw your hook and your bait in the largest pool of money, and that's what people get attracted to, and maybe you catch something. And that's the thesis on like why people get excited. So we'll learn more. We'll learn more, I think, into next year, and hopefully they don't talk about revenue per gigawatts as well. Hopefully. All right. Tesla and Elon Musk made some crazy comments this week about chips and foundries. Apparently, Jay, no one on the planet is going to be able to meet Tesla's scale. So we now have two companies who apparently no one can meet their scale in OpenAI, because Sam Altman has said the same thing. I'm begging you to go make 10 more fabs, TSMC, which they're not going to do. And Tesla's sitting there going, I like TSMC and I like Samsung and these others, but they can't make enough. So, hey, maybe we should make a fab. Maybe we should make something called a gigafactory and produce 1 million wafers a month. Okay. All right. Yeah. So Okay, we're
So, yeah, so Elon's gonna build a fab. I um I one, it's Elon, so
it's
never rule it
Elon.
out. Never rule it out. I think I think what was more interesting than that, at least um, more immediate, was he announced a big deal with TSMC as well. And I think that's what's going on here, because if you remember ancient history 3 months ago, he announced a big deal with Samsung Foundry. And that was a really big deal because lots of people, myself included, have been kind of skeptical about Samsung's future as a leading edge foundry. And in particular, they have this big fab in Texas that is, let's say, very underutilized, which is not good for a fab. And Elon essentially bought up their capacity. Right? Remember, he was talking about he was going to go sleep on the fab floor to get it to work. Right? He's going to work all night and sleep on the floor, which is, again, problematic from a manufacturing standpoint. But I take his point. It's a big deal for Samsung, right? Because it filled that fab. In theory, filled that fab, and he's now gone on and um, cut a similar deal with TSMC, not saving TSMC, but presumably putting down some money to lock in some allocation in Taiwan and in the U.S. Um, and I think that's the more interesting. And then I think today or yesterday he was teasing this on Twitter. He was gonna, he was open to doing a deal with Intel too. So
Right.
here we have a big tech company buying, putting down money to buy up to get silicon allocation. And so I wonder. One, I kind of wonder like why he couldn't get enough from Samsung. What does that say about Samsung's process? I think that's a question worth asking. But I also, it's but to your point, it's like he needs chips. He needs a lot of chips. So
I mean, I get that, right? Because they've got ambitions for humanoid robotics plus their cars. Like, I get that. I just on the timeline that we're talking about, I don't know. I feel like why would you even float the idea of a fab? I mean, others, TSM or Samsung, as you said, and Intel, right, would have capacity. Um, I mean, a million wafer starts a month for one customer is a lot. Uh, but you're right. He's Elon, big ambitions.
and was the deal for Tesla or is it for all of his
I think it's
X.A
everything. Yeah, X day
everything?
too. Yeah, yeah,
Yeah.
right.
I okay.
Yeah,
I right. I think a lot of times, and I think this is what happened with Sam Altman talking about opening a fab, is they're negotiating behind the scenes with I think
I get
in
it.
Sam's case he was negotiating with Nvidia, and Elon's probably negotiating with Intel and the U.S. government. Right. Oh, you guys won't give me my price, I'll go do it myself. And I think in Elon's case, you got to if you're Intel, you got to take that a little bit seriously. Um, you know, more chips.
Well,
We need more
yeah.
chips.
You know who else? You know who else's fabs are running at full capacity, 100% utilization? SanDisk. The SanDisk reported earnings, and I'll tell you, Jay, this is so interesting to me, um, because you've got memory, you've got spinning disks, which I just boggles my mind that people. I get it, but people still run on spinning hard drive disks. Uh, as like every form of this is constrained. Like everybody's like, not only are we constrained, our customers are moving away from quarterly contracts and POs to annual ones, and we might be locked up until 2027 at a minimum, if not longer. Like contract values going up, length of time going up, essentially. Which everybody who listens to our podcast for a long time knows. Like we have always said, why is memory and storage weird parts of the industry to cover because they're deeply cyclical. Customers will buy up tons of storage devices or memory in advance and then just use it right after. They just want the best prices. And now everybody's like, well, there's no cyclicality. There's just demand. Now, cyclicality will come back. I, again, have a hard time believing it stays like this forever. But you're at a point right now where, and I feel this pain for them the same way you feel to like the memory companies and foundries, even TSMC. Like they all know exactly what we said at the beginning is like we're not just going to go make 8 more foundries because we know at some point in time they will sit there unused, and then what do we do? So they're very careful, and SanDisk sort of said the same thing. Like they're like we're being very measured on how we build out. We're not just going to go out. We're trying to make the most of the capacity we have. We're not just going to all of a sudden go bring on 2 new shells because we can't. Like we're not. It doesn't make sense. But because of that, constraints will remain. And so you just again see this crazy tight supply chain across the entire specter, and it just doesn't seem like there's an end in sight for that. Everybody in this chain from CPUs to GPUs to memory to storage is going to have some degree of constraints for the foreseeable future, and it feels like every quarter, right, it's going to be this. We're at capacity, contracts are lengthening, contract values going up. It's just wild.
I looked at stock price performance since April of the prominent AI names, and you want to guess who the best performing? Think of any company that talks, any chip company, who's the best performing since May?
Uh, is it SanDisk?
Yep.
What was it? Percentage? What is it from May? What percent?
I forget the exact number, but it's a couple 100%. I mean, it's like doubled or tripled since May.
Yeah, and to be honest with you, what's crazy about this is that, and I am not an equity analyst or whatnot, but the stock actually hasn't yet to be re-rated. So it's like it's still they're like, well, we've got price targets, but it isn't like this is a fundamental changing moment in some of the ways that Micron, right, has been re-rated, right, or other names. Samsung to a degree. Like I think people are waking up to this, but as you know, so many people have been burned with the cyclicality of storage and memory that they just you have PTSD covering some
Yeah,
of these stocks.
yeah. I mean, this is the thing about memory stocks is people will say, oh look, SanDisk is trading or Micron is trading at like some very low multiple. I got to jump in, and like this burns investors, especially
All
new
the time.
investors, retail investors,
Yeah.
all the time. You're like, oh look, it's so cheap. I got to buy this. It's growing. It's cyclical. You got to look at peak multiples. You got to also look at trough multiples, right? Because it's memory more than anything else goes boom bust very very quickly.
Yep.
And I think
Very quickly.
that's very much why they're talking about, oh, we're going to do measured capacity. We're going to be very careful
Right.
about how much. That's standard practice. When you listen, if you go back and listen to years and years of memory calls, earnings calls, they're all sending out messages like that because they're not talking to you and me. They're not talking to investors. They're talking to each other, right? They need like
Right.
Samsung and Micron and SanDisk and all the rest. Like they're all looking at each other. They're like, is that gonna get a guy gonna double capacity and then like wreck my margins? I'm gonna make sure to tell him. I'm gonna signal to him that I'm not gonna do that. I'm not gonna go crazy. Are
Yeah.
looking at you,
Yep.
Samsung? Are you gonna quadruple capacity and ruin all
Yep.
our prices for a cycle?
Yeah.
Because this happens, and memory cycles are fun because they come and go really quickly, and they're not
Really
necessarily
quickly.
correlated to the rest of the market. And so it's fun to watch. It is not fun to invest in.
No. And
Like you really got to know what you're doing.
that's why I think it's been, slow to re-rate. I just think what's fascinating to me about this is the dynamic that changes here is so much of this is being like to some degree custom designed and designed in to these racks, to the GPU, to the CPU architectures. So it's not as easy as just having a warehouse full of SSDs that you just go and ship to your OEM to put in your smartphone, right, or whatnot. And it's not quite that simple with this cycle. So as you see the complexities of these solutions get designed into the underlying board, it's a little bit more of an on time, type of a thing. And that's the dynamic that changes this. And again, it won't last forever, but it's very different in this time. And like I said, it's hard for the demand environment you see today. It's not going to end anytime soon. But yes, the long term investors who know the cyclicality. And like people have been saying, look, we're not really seeing a drastic increase in wafer capacity, in wafers per year. So like we're not increasing the number of wafers from wafer makers that go to everybody, right, for storage and memory and CPUs, GPUs, and whatnot. So it's not like that part of the ecosystem is like, oh, sure, here you go. Here's 50 more million wafers a year. Like it's just they're measured too for all of the reasons that we just talked about in making their wafers. So there you go. It's our continued craziness that goes on for this
Yep.
week. And everyone will note we left AMD out, even though they announced this week, because next week they have a financial analyst day where we believe more in-depth information are coming. So we will talk about AMD next week and more. So until then, thanks for listening, everybody, and we will talk to you next time.
Thank you for listening, everybody.